Hello. Hi, everyone. This is Arun from Investing Gurukul. This is our third edition of the HEG stock video. So we did a initial part one video back in December, followed by the 1st of March. This is the third video of that. So here we will see some updates on what has happened in the last 1 month or so, and then also look at some technical analysis of HEG and catch up on what's been happening. So before we progress, there is some uh, disclaimer here. So this is not a financial advice; it's more for learning purposes, and do your own due diligence. The last month or so, so there are a couple of important news that has happened. So one of them is HEG's fundraising announcement. So with the Singularity Group Opportunities Fund headed by Madhusan Kela, so they invested around 500 crore, out of which 250 crore was the initial investment for which they would be getting equity shares of around 1.75 crore. And then in case in the future, if they want to invest more, they have an additional option to do a further 250 crore investment. So this is going into the Bilwara Energy Limited, which is the one of the subsidiary of HEG. HEG currently holds 49% with this equity dilution, so they would go down to 44.3. While it's a dilution, but it's also a good one because going forward, given that the demerger is happening, so this investment directly goes into the green tech initiatives. So that's going forward for a long-term view, this is a very good thing. And then other than that, as it's been tariffs all over. So in that, with regards to the graphite electrode business, it's not the US who has been putting some tariff, but it's the other countries like Japan on the 25th of March put a 95% duty on China graphite electrode. So on that day, when this was announced, we could see a spike of around 18% in the HEG stock. So the market took the news well. So that these, I think we can expect such kind of anti-dumping duties from different countries now that there is, like a tariff war going on. But other than that, from a US front, not much has happened. Steel prices have gone through a lot of volatility, but there is no clear indication of whether there is a proper tariff or not. So, other than this, we have the fundamental story, which is the EAF conversions. So, electric arc furnace is the way to go for the future. As you know, from so most of the countries are moving away from blast furnaces, uh, which produces a lot of carbon, to the electric arc furnaces, which is good for the environment. So, like as you can see in the screen, like these are the set of steel plants which are looking to go to EAFs. So, all these bodes well from a fundamentals point of view. Um, and then, of course, there is also growing demand. More and more investments are coming into the steel industry, and when those steel plants, get built, they are getting built on the electric arc furnace. So, more demand for steel means more, demand for the graphite electrode. So this also bodes well. So recently, JFE Steel, did a investment of around 2.26 billion for electric arc furnace steel. And in the same way, Hyundai Steel is building a 5.8 billion huge infrastructure project in Louisiana in US. So that also bodes well for the demand going forward. And the China story, as you know, China is mainly based on the blast furnace based steel, and they are looking to move towards electric arc furnace. While the move itself, the transition itself has been slow this year due to various uncertainties, economic downturns in China, but it is still on an uptrend. So for this year, they were supposed to go to 15%. So you can see the dotted lines here. 15% of the share of their furnaces goes from blast to the EAF. While they have been moving towards it, that the conversion has not been like on what was expected. So they are a bit slow, but it is going forward. And then, so see, for me, I personally hold this. So for me, the reasons to buy are again the long-term story of moving towards the EAF. China being the major one who has to move. So that means that the industry demand keeps on growing. Then the second one is within the company HEG itself, there is the demerger that is going on, HEG and HEG Green Tech. As you know, that I had covered this quite a lot in the last video. You can have a look at it. I'll put a link into in this video. So that is a huge value. Most of the graphite electrode businesses are now moving towards building the anode materials for the battery. So this is an industry trend, and HEG is also part of this trend. So that's why they are doing this green initiative of HEG Green Tech, and also the demerger is going to really create a lot of value. Then of course the technically the stock is like in a huge like a retracement, and buy it's in a buy zone. So we will shortly have a look at the technicals. Before that, yeah, some of the risk, possible China, economic situation worsens. So when the economic situation worsens, the steel demand goes down. So this is one of the risks that we have. And of course, if there is a US-centric recession that happens, that will also slow down the demand of the steel. So these are the things that you need to like, in case if you are investing in this, you need to keep track of this. And third is, of course, company specific risk. If, on the demerger, if something goes wrong, yeah, if the management is not doing their job, so then there is a risk. But I don't see that, they are a very successful, management till now. So I think this is a limited risk, but still something you need to keep in mind. For me, reasons to sell would be in case of a potential recession that happens in US, that would be a point of sell for me. I would come out of that of the stock at that time, um, and then probably enter at a later point in time. For now, let's switch on to the technicals. So here on the HEG, so this is a HEG chart from the end of last year. So as you can see, this is the initial coverage we did it around the last week of December, following this huge volume buy that happened on no news. There was no news here, but still there was huge amount of volume buy that happened. So that piqued our interest, and then we looked at it, and that's when the demerger story was also heating up. So, and then as you know that the general market itself went down over a period of month or so. So at the time, this stock also gave up some value. So it went down from middle of, mid 550 or 500 to, in fact, even to the 330. So around at the time, we, again made a video around the first week of March. So this is when, I entered, in a even more bigger way in the stock. So we did the video on the first week of March. So from then on, you can see like this has gone up 33%. So that's really good. So that in that it's that kind of gives us a safety net, because we believe that this zone, that the 430 or 40 zone, is the actual volume zone. So as you can see, every time stock is around the 440, there is buying coming into the stock. So anything below the 440 levels are a good, really good zone to buy the dip. But even like around this 440, it's a good place to buy. As you can see on the 25th of March, that's when the Japan anti-dumping news came. So this went up another 18%. So for us, I mean, there is certainly is still a area to buy. H2 is supposed to be a good time for the company as per the latest video interview from the management. So they do see that the revenue is going to go up because last time they were only doing 80% operations, and now they will move towards the 100% of their operational capacity. At the same time, they do see some pricing pickup in the electrode business. So that's something that we need to wait and watch. So we'll do another round of update video after the HEG earnings in May. So till then, thank you and goodbye.